What's good, people, traders, and dedicated gold chasers? Welcome back to another weekly review at the Modern Day Trader with your boy Marcy. And it's been a minute since I've been on one of these. It's actually been 2 weeks. So I wanted to give you guys a little breakdown of what has occurred in life, man. What has happened, bro? Hey, life has happened. Life has happened. So the reason why I missed my review last week was mainly because of family things happening. So an extended family member, one of my cousins, his baby mama, got robbed, and unfortunately, God rest her soul, she passed on. And so with all the family things happening, and she's not a family member, but at the end of the day, she's the mother of my cousin's kid. And so we had to come together and really just I had to be there for the family. And yeah, however, it's just your boy this week. I wanted to shout out Sam, and I wanted to say happy birthday to my boy. I hope you enjoyed your off weekend, mate. And I really hope that you had hella family time, and I hope you had a good time with family, a good time with friends, had some good food. However, let's jump into the weekly review. So this week I'm gonna do things slightly a bit differently, just because it's been 2 weeks. 2 weeks since I've been here last. And it's going to be mainly trading based. And the reason for that is because I've taken 9 trades, guys. 9 trades over the past 2 weeks. Now, I have ended the 2 weeks off. You'll see in a bit. I have ended the 2 weeks off with a 1R return and a 66% win and break even rate ratio. However, this past week was complete ass, and it was a test of my mental fortitude. And I think the good thing as a trader is that you can really see what is going to happen potentially in the markets. The same way I'm predicting or analyzing that this week early on is still going to be within the range that we're in. And so what do? I think that you either risk less or you reduce your risk reward so that you can potentially capitalize on shorter moves and still see your equity curve grow over time. Now, I will jump into 3 trades. I'm gonna take you guys through 3 trades, and the reason why I'm doing that, and I'm only taking you guys through 3 trades, is because there's just too much trades to go over. What you guys will get in this video is a breakdown of the past 2 weeks. You will get 3 trades that I've chosen: a winner, a loser, and a break even. And then after that, you will get some analysis from what I potentially expect for the next day or two in the markets. Now, mentally, this past couple weeks has been a bit hard in terms of work. Now, recently, a client that I've been working on for the past year has approached us, and they have actually fired their director. And so what that means with the implementation of new directors, there's a high chance where when new directors come on, because they want work to get done immediately, and work that usually an engagement doesn't last for a year in the accounting space. And so when you have those changes in market conditions, or changes in just conditions in general and circumstances, you can then start to anticipate that there's going to be pressure applied. And that's exactly what's happening. And I think I've just been working, bro. Like, I've worked this whole weekend. It's Sunday today as I shoot this video. It's Sunday. I've worked this whole weekend, and what I can say is that I just hope I can get this fucking thing done, bro. That's what I can say. For fuck's sakes. However, I think we can jump straight into the charts, and I hope you guys enjoy this and that you guys can learn something from it. Don't forget to comment down below if there's anything that you guys want to see from my journey particularly, and hit the like and hit the subscribe button. See you guys on the charts.
So before we actually jump into the charts, let's take a look at my journal. So this is my journal for 2024. So far, I've taken 53 trades, and it's a really good start to the year in terms of number of trades. And after my trade number 40, I've made adjustments, and what I've realized is that I can take a decent amount of trades. Let's actually filter for the month of April so far. The month of April has been extremely good, and this gives me a lot of positive feedback on what I've been doing, and the changes and tweaks that I've made has been really good. Now, the most recent weeks, as I mentioned, this week particularly wasn't the best, but if you just zoom out, and this is what trading is all about, it's not about one particular week, it's about weeks put together, it's about months put together, it's about tweaks that you make over time that will then get you to a place where you want to get to. Now, the last video that I've done, I had taken 9 trades over the past 2 weeks with a 66.67% win to break even rate. And I've ended the week up, or the 2 weeks up 1 odd. Now, as I mentioned, the past 2 weeks has been, well, not necessarily the past 2 weeks, the past week has been very, very challenging. And we will get into the 3 trades that I think over the past 2 weeks that stands out to me the most. Now, I'm going to go through a winner, a loser, and a break-even trade. And the reason why I'm doing this is so that you guys can see that there's something to learn from each trade, and there's something that you will understand from my approach to the markets, and just having the mentality of a trader, understanding that when you go through streaks of break-evens or losers, the way I did here, you really just go into the market thinking that the next trade has nothing to do with the previous trade, knowing that overall, even though this week wasn't the best, knowing that overall your trading strategy works out and is playing out. I have a 75% win rate for April, or win rate and break-even rate. So that means if I zoom out, I can really see that I've been winning. So over the past 2 weeks, I've taken 3 losses, 3 break-evens, and 3 wins. Now, this resulted in, as I mentioned, a 1 odd, and just taking a look at the equity curve. Now, the equity curve looks quite clean, and this is mainly due to the start that we had. Now, you can see that we had a start, and really what's happening here is that we are forming this higher low. If you look at it in terms of structure, we formed this higher low, and price pushed up to create this higher high. And so in theory, we should find support in around these areas. Now, we know that we cannot predict what the next result of the trade is. However, what we know is that we just take trades according to the plan, and that's that. So majority of my trades were breakout trades, and I've taken 8 breakout trades. 37% of them are wins, 37% of them are break-evens, and 25% of them are losses. Majority of them, or all of my trades of the past 2 weeks, has been longs, and this is mainly due to the fact that the market was actually pushing to the upside. Now, what I did want to mention is, before I forget, the reason why, if I filter upward this week, the reason why this week was so shit in terms of results is mainly due to the way how yen looked on the markets in terms of structure. So if you take a look at the structure on the 4H time frame, what you will see is that price action has actually been in a fat, big range, and it's just been moving in that range. So usually what you can see, the reason why I have a good return is because at the start of April, we had clean impulsive moves to the upside. And this is just telling me that if I had to take a risk off for a very risk-averse approach to the market this week, that I would have then saved money in the market instead of playing with the market. So maybe I should have taken 1-to-1s in these market conditions instead of aiming for 1-to-2s, where price action is less likely to continue impulsive moves over a long time. And that's what you learn over time in the markets when you trade so long, you understand the way a particular pair moves. And once price action, for GJ specifically, once price action enters a range, then there is a high chance or a high likeliness that price action then starts ranging, and you're not going to get that big pushes to the upside. So if you're looking for a 40 pip push to the upside, there's chances that it's not going to push 40 pips because price action is in the range. It might push 30 pips, and that would have given you a 1 to 1 or 1 to 1.5, and then it pulls back and takes you out to break even. And that's what you can see on these results. Now, what I am looking at is that once price action breaks out of these ranges, then maybe we should start looking for the 1 to 2s once again. However, the plan is the plan until we reach 20 trades for this sample size. So if I take this off, we still have 7 trades left until the sample is done, right? Let's jump straight into trade number 1. Trade number 1, which is the winner. In this trade, I encountered an interesting situation where my initial plan was initially to first take a double bottom from these areas. However, this didn't materialize within the expected timeframes that I was anticipating. This turned out to actually be a blessing in disguise, in my opinion. And as you can see, if I take a double bottom, what I'm going to do is I'm going to be looking for 1-to-1s, because double bottom as yet, I don't have enough numbers behind me to then be able to say that I can take a 1-to-2. Now I'm waiting for enough numbers for the market to play out enough so that I can have enough numbers from these points of interest here, for example, so that I can go to 1-to-2. And once I have enough numbers behind me to say that this strategy plays out to 1-to-2, then I will then make the adjustment. Jumping back into this, as the 4H closed at 11, I found myself in a position where the newly formed candle presented a favorable higher time frame bias. What does this mean? So my bias already for the day was bullish. And when this 4H closed, not just the GJ's 4H closed bullish, but we also had 4H correlation across the pairs in the market. This setup then provided a solid foundation for me potentially achieving a 1-to-2, and that was perfect, because the minute I have those higher time frame correlations and confluences together, I can really start to anticipate that price action is going to push to the upside. Now, this was in the first week that I missed out, that I didn't do a video. Right? This was not in what we saw the range on the 4H. So a key indicator for me was the formation of this higher high firstly in the previous 4H candle. So what you can see, the price action was forming higher highs and higher lows on the 15-minute time frame. So structure was quite clearly bullish. And so when price action formed this higher high in the previous 4H candle, and we can see the price action then in our candle that we're entering in, you can see that we had the break and close above the previous 15-minute higher high, and this signaled a shift in market dynamics to me, prompting me to zoom into the 1-minute time frame to pinpoint entry opportunities. I executed this trade based on buy stop, and just merely on the fact that the 1 minute was now bullish too and forming higher highs and higher lows, and this allowed me to now then enter on the higher high, placing my stop strategically below the higher lows, what you can see here. Now this is the 1 minute time frame entries, so 15 minutes obviously, but on the 1 minute, this is the newly formed higher low. And how do I know that? So if you just look at the 15-minute time frame, now in each 15-minute candle, there's 15 1-minute candles. So we formed a high, but that high was preceded by this higher low. Then you can see price action push below these higher lows here, forming these lows. But when this candle opened, we pushed to the upside first, and then we came down to form these wicks, which formed the new higher low. After this higher high was formed, we formed a new higher low, and with the break and close of this candle, as I mentioned, this indicates to me that I can now enter. Hence my stops being at 192,220, enter at a round number of 192,400, and this approach only exemplifies the importance of being adaptable, like in the markets. That's all it is, like, and you just you follow your plan, and that's all you need to do. Once you follow your plan and you execute, you really just let the trade play out. Now, once price action got to a 1-to-1, which is in and around these areas here, it's an 18 pip stop loss. So when we got to around 580, 192, 580, which was on this initial 30 to 15-minute candles, which is in the first 30 minutes of the trade, I went break even and I just left it to play out. I can tell you, when I got this alert from TradingView saying I hit TB, I was fucking ecstatic, mate. I was ecstatic. And that was that trade, and the rest is history. Boom. Let's jump into the second trade. So we're looking at the second trade right now. This is a break even. Now, I chose this trade particularly because it has multiple psychology rules behind it, and it can play with your mind. Now, to give you a bit of context, the first trade that I took was a loss on this particular day. So I came to the charts, and I believe the loss was in around this area. I'll actually show you this loss after this as my losing trade. And I took the loss, and in the aftermath of me taking a losing trade, I was quite eager to regain lost ground, to be honest with you guys. And this really led me to monitor the charts a bit more. Now, obviously, I'm at work and I'm being watched, and I have all of these outside factors that are played in. However, after a loss, I have all of these factors being added in. I have all of my higher time frame things added up. As this setup for my second trade unfolded beautifully as the market broke through recent highs, as you can see here. So before we get to the actual break of the recent highs, we have the daily matching the 4H, which they are both bullish. We then have 4H correlation, and that, as I mentioned in the previous trade, signifies a potential 1 to 2. And so I know that I have 1 to 2. All I need to now see is a break and close of structure to the upside with momentum, and I can start anticipating that price action is going to push to the upside. So this breakout right here hinted at the likelihood of further upside movement, offering an enticing opportunity to enter the market. I chose to enter the market, as I mentioned, as always, using buy stops, a decision that allowed me to capitalize on the anticipated upward movement once the market confirmed its bullish bias. Despite the initial sideways move in market, the price eventually began to rally in the desired direction. And what you can see is that I was clenching my ass in these areas here. For 30 minutes, usually when I get these trades and high momentum comes in and high volume comes in, usually there's a continuation. And so when you see these two 15-minute candles close, pin bars, I'm anticipating this to be an L. I'm not even going to lie to you guys. I'm anticipating that this is going to be an L, but I just leave it and I let it play out, because my plan don't say there's any management when price action pushing to the downside. That's what my plan says. It says that you just leave it and you just let it play out. And so I let it play out and it pushes to the upside. And what you can see is that I've implemented a very crucial aspect of my trading plan. I decided to adjust my positions to break even once the trade hit 1-to-1, same as the previous trade. Once the trade hits 1-to-1 risk to reward ratio, I went break even. This decision, rooted in careful risk management, proved to be pivotal in this trade. And the reason why I'm saying that is, once you get a sample size of trades and you can see that when price action reaches 1-to-1, it's likely to push to the upside. And if it doesn't push to the upside and it comes against you, it's more likely that it's going to hit your stop loss. And you have that sample size, why not just go break even? And that's why I'm saying it's proved a pivotal moment, not just in this trade, but in my trading plan. So interestingly enough, this is a trade approach, my original take profit, and it narrowly missed my take profit. And the reason why I chose this trade particularly is because you get these trades where price action is a pip away from your take profit. Now, in reality, this is not just a pip, because your price action also needs to go further than your take profit because of spread and the way brokers and prop firms are set up. The price action actually needs to push through your stop by about 2 or 3 pips, sometimes even 5 pips, depending on your broker. So in reality, this is not as close as it seems, but this could fuck with your mental. That's something that, like, I need to mention. This could definitely fuck with your mental. And also bear in mind that my previous trade that I'm coming off from on this particular day is the fact that it was a loss. But what I can say is that this sudden turn of events right here just reinforced the importance of sticking to your trading plan and maintaining discipline. And that's all it did for me. Like, when I left and this trade hit my stop loss at break even, all I told myself is, your trading plan is working, and all you need to do is maintain discipline and continuously stay disciplined in the markets. So despite this unexpected reversal, I experienced no slippage in the process, which is kind of mad. And I feel like this is kind of a testament to my trade execution and my risk management, but it's also due to the broker and all the other aspects that comes with that. Now, this trade serves as a valuable reminder that sticking to your trading plan and the unpredictability of the markets and the necessity of staying adaptable and disciplined in the face of fluctuating conditions is one of the most important rules that you can have, and solid foundations that you can set for yourself in the markets. And the reason why I say that is because without discipline, you're just a gambler. If you're going to be changing your strategies all the time, if you're going to be changing the way you approach the market, you are really just a gambler, and you're not trading your plan. And so on that note, I would say, if you're not as disciplined as you want to be, discipline is a skill that you can work on, but I would suggest reading Mark Douglas' Discipline Trade. The book is dope as fuck. Let's jump into trade number 3. So, as I mentioned, this is the trade that preceded the break-even trade. And I wanted to mention that the start of the day presented us with a red folder news. And what that means is that when you go to Forex Factory and you check the day, the news events. So my trading plan says that when there's pound news in the markets, in the morning, in the afternoon, I cannot trade that whole for each candle. And so I had to miss this whole move here due to me staying disciplined and me following my plan, just knowing that the markets are volatile. However, my results that I've gotten over time shows me that if I just remove the times that I trade in news, I'm more likely than not to be profitable. And so that was great, because the reason why I'm saying that is that the previous candle before the news was actually bearish. And that then means I would have had to look for sells, and then I would have looked for a sell below here. I wouldn't have gotten in. And then I'm thinking, damn, I need to wait for the close of the candle, and I'm sitting twiddling my thumbs. But now I didn't look at the chart at all in this 4H. And when I came to the mark, we had the daily being bullish, we had the 4H being bullish, and we had 4H coordination. And what this meant is that we had potential for this to be a promising session, and not just a promising session, but a promising setup. And so what I'm looking for is for these 15-minute structures to continue pushing bullish and forming higher highs and higher lows. And upon price action hitting this higher high, we had a higher low, as you can see here, and we had a break of this structure right here. As the 15 minutes chart confirmed the break of structure in this candle, forming this higher high, I entered the market as always with a buy stop order, expecting price action to follow through with the anticipated bullish momentum. Now, what you can see that this candle has so much momentum that it does not have a wick to the downside or a wick to the upside. And so I'm really anticipating that we're forming these higher highs. The chances of the next candle being bullish is really high. It's at least 60% that the next candle, after we break a key level in the market, that the next 15-minute candle is going to push to the upside. Now, unfortunately, the bullish momentum was short-lived. And I was just like, damn. When that next candle closed bearish, I was like, damn. But I swiftly pulled back and hit my stop. And I was like, it's part of the game. This is what I always tell myself. It's part of the game. It's part of the numbers. And this is just to collect numbers. However, upon reflection, one potential contributing factor could be the lack of what I think is the lack of a clear, not necessarily a rejection week, but the lack of a top week here. And the reason why I'm saying that is that if we have a top week on a 15-minute bullish close, on the 1 minute we have a pullback. And what that means, we have a correction on the 1 minute candle. And that means that if the next 15-minute candle then pushes to the upside, on the 1 minute we're forming a higher high. However, here, because there is no wick, we formed a higher high, and then me entering at 470 means that there was no high and low formed at that point. And price action just pushed to the upside and it's taken me out. Now, what I do want to say is that this observation prompts further investigation into the intricacies of this particular matter that I brought up, where there's no wick at the top. And I just realized that every opportunity is an opportunity of its own and a learning opportunity. And this contributes to continuous learning. And I was telling Sam before that there's things in your trading plan that you need to continuously build on. And I feel like this is something that I need to build on. Now, my understanding of structure, I think, is quite detailed. And the way I understand how candles are formed, just by the look and the makeup of a candle on a higher time frame, I feel like I can deconstruct or I can reverse that candle just by looking at it. And that's just by spending time looking at candles. And I feel like that when I do get to this 20 trade sample size in, there's two things that I want to investigate. I want to investigate, number one, over the whole 60 trades that I've taken, is that if a candle closes with no, if I'm taking buys and a bullish candle closes with no top wick, what are my chances of losing? And then similarly, if it's a sell and it closes bearish with no bottom wick and it triggers me in on the next candle, what are my chances of a loss in that situation? And then the second thing that I want to investigate is the first 15-minute candle on a 4H candle. Because usually what I've noticed is that when price action pushes in my direction in the first 15 minutes and I interval from that 15-minute candle, there is a higher chance of me losing than there is of me winning. So that is something that I need to investigate. And that contributes to continuous learning. And that's the way you formulate your trading plan. That's the way you make tweaks, is that you don't just say this is a loss and it's a loss. No, you start investigating. You ask yourself, what could I have done differently in this scenario? Like, what is different from this trade particularly to all my other wins or all my other break-even trades? What is different? And when you start noticing those differences and you're going into detail on your trading plan in particular, you're looking at what exactly is happening, then you start realizing that price action could potentially do exactly what you expected, or you can add things in your plan to avoid those losses. And yes, let's jump into a quick analysis for the week ahead. So this is what we're looking at with pound in the week ahead. I know that when we did our analysis on Wednesday, we were in and around these areas, and we were anticipating that price action could potentially push off from these areas, because I had this last bullish candle before the big bearish bullish highlighted, and I was saying we are at the top of the range, and there's a high chance that price action could potentially push to the downside, and not just fill this imbalance that is left over, but also potentially collect this liquidity and run this liquidity that's under these areas, under these lows out. And so with that being said, what you can see is that, as I mentioned, price action is really in a range, and price action. So what I'd say is, you use risk management in this time. If you are trading pound yen, use a lot of risk management due to the fact that price action could shift on you. Manage your trades accordingly to, obviously according to your trading plan, but I would say be a bit more on top of it now within these trading conditions. We had these big pushes to the upside, and it was clean and it was good for our return. And now we're in a sideways moving market. And when you are in a sideways moving market, if you trade multiple pairs, move on to a different pair. But if you just trade TJ in particular, what you can do is you can get these intraday trades. And so what I'm anticipating is that with this push to the downside, and you can see momentum has shifted off from these higher areas here, from these highs, and I'm anticipating for price action to simply push to the downside. And what this, to me, what I can see is that you can see that Tuesday, Wednesday, Thursday were very, very, very doji-like candles, and it was kind of a range in the range, and so we broke out of that range finally. So from a 4H perspective, if I just zoom in, what do I anticipate? I anticipate a potential retest of these areas on the 4H, and what that would then form is that once we get the retest of these areas here early in the week, potentially tomorrow, I'm then anticipating for price action to push to the downside. And this, what then, I'm hoping that this would happen on Monday. What that then means is that price would hit the top wick early in Asia or London, and once price action hits the top wick on the daily candle, you will then see the flip of price action pushing bearish, and then you see the continuation to then test these lows of the consolidation. Now I could extend this all the way up to there, however I just want to keep it on the particular point of interest that I anticipate getting sold. Now if price action bounces off from these areas, I don't know. I do think that this is either an accumulation or a distribution phase happening here. I don't particularly know, because I don't know Wyckoff theory that much. But what I do know is that this is a range, and I know that I can trade ranges if there is clean movement. And this height now seems to be clean moving for Monday. And so all I'm going to be doing is anticipating that price action would pull back early Monday. And then once we get the continuation on the 4H time frames, I'll then scale down to the 15-minute, simply looking at structures. And these structures could be clean. If I got a bearish close, all I'm going to be looking at is potential price action to break lows, break and close below certain lows. And once price action breaks and closes below certain lows, I then anticipate that the next couple candles will continue to the downside and see if it plays out. If it doesn't, it's part of the numbers. If it plays off, it's still part of the numbers, and you get good numbers. And that's what I'm expecting for the early part of next week.
So guys, that was the charts. I hope you guys enjoyed that, and I hope you guys enjoyed the little analysis that I did at the end, and hopefully it plays out. If it doesn't, we make adjustments accordingly. If structure breaks to the upside, then we just adjust for bullish structure, and that's all you need to do as a trader. You adjust on the basis of what you presented. You don't just stick to a particular bias. You have an invalidation point, and when that invalidation point is broken, you then make adjustments. But I hope you guys enjoyed the trade breakdown. I hope you guys enjoyed the breakdown of my past 2 weeks and also the analysis. And if you did, don't forget to like this video, comment down below exactly what you guys want to see from my progress and my journey in trading. And don't forget, guys, to subscribe to the Modern Day Trader. I wanted to end this video telling you guys to not forget that your unmatched perspicacity coupled with your sheer indefatigability makes you a feared opponent in any realm of human endeavor. From your boy Marcy at the Modern Day Trader, have a good week and don't forget to fucking smash the markets. Peace out.